Welcome to Nationwide Retirement Solutions Participant Education Workshop, Countdown to Retirement, Managing Your Savings Plus Account. This is part 3 of a 3-part series. My name is Greg Saban and I'm your Nationwide Retirement Solutions Retirement Specialist. I'm a registered representative of Nationwide Investment Services Corporation, which is a member of FINRA. This presentation is designed for State of California employees eligible to participate in the Savings Plus program. Nationwide is a deferred compensation provider, but you can also think of us as your retirement education resource. We provide you with basic financial principles that, when put into practice, may make a difference in your retirement future. We provide these educational services in order to help you secure a better quality of life, both now and in the years to come. Neither Nationwide nor any of its representatives give tax, legal, or investment advice. For such guidance, please contact your legal or professional advisor. Your risk tolerance and time horizon changes in retirement. This is the time you need your retirement savings the most. This workshop will discuss your distribution options and how to successfully manage your account for longevity and inflation. Savings Plus offers fast, flexible payment options. Let's discuss them in more detail. When you're ready to begin receiving a payout from your retirement plan, there are many ways to do so. We'll focus on the 3 distribution options that are available from Savings Plus. Each person has different family, life expectancy, and financial situations, so this allows a variety of solutions to fit almost every need. Savings Plus offers the following flexible distribution options. Direct payment. You can take a specific dollar amount or percentage of your account balance. Periodic payment. You can receive payments monthly or annually. You can also choose a fixed amount that will last as long as you have money in your account, or you can choose a fixed period, which will last an amount of time that you specify. The amount of your payment adjusts once a year based on your account balance. You can change the amount or stop your periodic payment at any time. If you're taking a periodic payment, you can take a supplemental payment at any time. The remaining amount in your account will continue to stay invested in the options of your choice. Let's take a closer look at these payout options. Savings Plus allows you to take a full or partial withdrawal. With a full withdrawal, your account is paid out in a lump sum, and you'll no longer be a participant in the plan. With a partial withdrawal, your remaining account balance may be taken at a later time. Your remaining balance remains invested, and you maintain your plan participation benefits. Keep in mind, any money you receive from your Savings Plus account is considered taxable income unless you roll it over to an IRA or another qualified plan within 60 days of receipt. Whatever portion of the lump sum distribution that is not rolled over will be taxed as ordinary income. The amount of taxes you pay depends on your personal income tax. Keep in mind, taking a lump sum payment may push you into a higher tax bracket. Now, if paying a substantial portion of your money to Uncle Sam has you concerned, but you need some cash right away, you may want to consider a partial withdrawal. You decide how much money you need in cash and how and when you want to receive it. You may wish to receive the remainder of your money as a stream of regular payments based on a fixed number of years or a fixed dollar amount. Your remaining account balance will remain invested. Continue monitoring your account for market risks and possible loss of principal. By combining a partial withdrawal with periodic payments, you get both: cash to pay off bills or take that long-awaited vacation, and deferred taxes while receiving regular income. Keep in mind that taxes are due on any amount you withdraw, not the balance in your plan account. Now let's discuss required minimum distributions. Know your required minimum distributions rules. Treasury regulations generally require that you receive a required minimum distribution in the year you reach age 70 and a half or the year in which you retire, whichever is later. RMD may affect your Savings Plus account, most IRAs, or both if you have both. This rule establishes a mandatory date when minimum payments, based on your remaining life expectancy, must begin. At that date, you must start taking payments from your Savings Plus account. In plain English, you cannot put off receipt of retirement income from deferred retirement accounts indefinitely. RMD could negatively impact your retirement dollars if you don't act on it. If you don't take withdrawals, or if you take less than you should, you'll owe a 50% federal penalty tax on the difference between the amount you withdrew and the amount you should have withdrawn. And then you'll still have to withdraw the required amount and pay any income tax due. Talk about losing retirement dollars. Also, RMD must be figured separately for each account that you have. This is one of the reasons you may want to consider consolidating all your retirement assets with Savings Plus. We can do this calculation for you. Once you separate from service and Savings Plus is notified of your terminated status, you should continue to manage your investments. Then, when you're ready, choose how you'd like your benefit payments to begin. Rules for distributions differ between 457 and 401k. 457 assets can be withdrawn without penalty at any age upon retirement, or age 70 and a half if still working. 401k participants must retire at age 55 or later, or be age 59 and a half or over to avoid federal and state penalties. To begin receiving benefits, you will need to complete and submit the benefit payment application form located near the back of the benefit payment booklet. Payment options can be changed at any time, and very importantly, avoid the $2 check fee by electing direct deposit. All withdrawals are taxed as ordinary income. The amount of federal income tax that is withheld depends on which benefit payment option you select. Here are a few general guidelines for tax withholdings. A mandatory 20% federal income tax is withheld on full and partial withdrawals and periodic payments completed in less than 10 years, except when this is a required minimum distribution. For periodic payments made over more than 10 years, federal taxation is determined by you, the participant. The default is married with 3 exemptions. RMD and emergencies are subject to a 10% federal income tax withholding. Subject to means that the tax withholding is not mandatory and can be adjusted to either a higher or lower amount. After the close of the year, a 1099-R form will be sent to you for tax reporting purposes. It will report your total withdrawal amount for the year, the amount of federal taxes withheld, and the amount of state taxes withheld, if any. State taxes are only withheld upon your request. When you know your investment objective, and then look at your risk tolerance and time horizon together, all of this determines what is called your investor profile.
Determining your investor profile is important. It gives you very clear direction for the type of investments that might fit better within your risk tolerance and time horizon. It may help you make decisions about which investments to choose, which is often the most difficult part of investing. Let's discover your profile right now. We've divided your investments into 3 basic asset classes: stocks, bonds, and short-term investments. These 3 asset classes are further broken down into 6 categories. The Savings Plus Investment Guide is a great tool to help you determine your investor profile. You can access the investment guide on our website under the Forms and Publications tab, or call customer service to have one mailed to you. On page 29 of the investment guide, there are 5 standard investor profiles. Notice that the profiles each have a different mix of colors. Those colors represent the 6 asset categories available through Savings Plus. 4 of these asset categories fall under the investment type of stock. These 4 asset categories are called international funds, small cap funds, which are American companies worth $300 million to $2 billion, mid-cap funds worth $2 to $10 billion, and large-cap funds worth more than $10 billion. The asset categories listed here are in order of highest risk to lowest risk. Deciding how to distribute your investments across stocks, bonds, and short-term investment funds is difficult. That's where your investor profile can help. Here's a sample of a moderate investor profile with a mix of investments of stock, bonds, and short-term investments representing 6 asset categories.
A moderate asset allocation model may be suitable for you if you have a lower tolerance for risk than an aggressive investor, and you're seeking both growth and income. Maybe you have a longer time horizon, and you're willing to accept moderate short-term price fluctuations in exchange for potential long-term returns. The 2 components in determining an investment strategy are time horizon and risk tolerance. As you get closer to retirement, your time horizon shrinks, and your risk tolerance may change. With increased longevity, you'll need your money to last even longer in retirement. Review your account annually. Rebalancing your account and making changes can be done via the web, voice response system, or customer service representative. Every quarter, you receive a statement of your account. Statements are powerful informational materials, and they can be used as a tool to help your planning because they show you where you currently are. Newsletters are packed with information you need to know as an investor. Please read them carefully. You never know what may be in the newsletter that may help your personal situation. Let's look at some other actions you can do to become retirement ready. These actions will not only help you, but they'll also help those you love. That's why it's important to manage your Savings Plus account throughout retirement. One thing you want is for the right people to receive your account balance should something happen to you. Many times that doesn't happen because someone forgot to change the beneficiary. Trust me, there's many unhappy stories around that. Check all of your financial accounts to ensure that you have the correct person named and change them immediately if they're wrong. Once something happens to you, it's too late. The financial institution is under legal obligation to pay your account balance to the person listed as beneficiary. In addition, make sure to call Savings Plus at 866-566-4777 anytime your address changes. As an active contributing participant, your address was updated each month through your payroll office. Since your contributions stop at retirement, Savings Plus no longer gets this update. It's your responsibility to keep your address current. Here are a few tools to help you make informed investing decisions. Our website, www.spp4u.com. There are calculators that can show you what your take-home pay will be if you want to make changes online.
There are other calculators that can give you hypothetical illustrations on how much your account can grow just by adjusting variables that you choose.
Or attend a CalPERS workshop. Check the CalPERS website for more information about their retirement workshops. And of course, licensed retirement specialists like me are also here to help. I encourage you to call and set up an appointment before you make your final decisions to make sure you've properly considered all your options, or to obtain clarification on information covered today. For more information, call 866-566-4777 and press *0 to speak with a customer service representative. Or contact us online at spp4u.com. Remember, information provided by registered representatives is for educational purposes. It is not intended as investment advice. And now, let's review the topics covered in this workshop. Please keep track of your scores. All right, how much do you recall? First question, what 3 payment options are available to you when you're ready to take a distribution? That's direct payment, periodic payment, fixed period or fixed amount, and supplemental distributions. When you take a distribution, are you required to take your entire balance all at once? No. You may take a full or partial payment withdrawal. It's up to you.
When do RMDs start? April 1st of the year following the year you reach age 70 and a half.
Should I consider changing how my Savings Plus account is invested when I retire? Yes. You have a shorter time horizon and your risk tolerance may have changed. This doesn't mean you have to move everything to a short-term option, but you may want to review your account. This concludes part 3 of Countdown to Retirement, Managing Your Savings Plus Account. Thank you for watching.
Please take a brief survey to let us know how you scored. Just click back on your internet browser to return to the main page to launch the survey.